Hey everyone, it's about an hour and 15 minutes after the market close. Sorry, it's a little late today because I had some things I had to take care of. But we can see today was mostly a down day. I shouldn't say mostly, it's pretty much completely a down day. The only time we spent time above VWAP was right here, and just minutes really. A couple seconds over here, over here. We really didn't spend much time above the VWAP at all today. So definitely in the red, definitely directional. But what we notice is that 571 and 572 gamma levels that I talked about in Roger Scott's VIP room, those held in the day. So there was this battle between 571, 572. We did dip down to 570 at some point, but then over the last hour or so, 2 hours of the market, that 572 really came into focus, and that's where we stayed, and that's where we closed. Now, what does that mean? We gapped up overnight. Micron earnings had a lot to do with that. The Asian and European markets trading on that news elevated us up, and then the US markets traded it down. So in the end, we didn't really go anywhere. Yes, we made a higher high, but we closed at 572.3. It's really not that much higher than any of these levels over here. A little bit, tiny bit. So the 575, 580 level that we talked about yesterday is still in play. 575 is going to be tough to get through as long as that gamma structure is still there. And then the 580, and then we'll see where it might be time for a bit of a pullback if we get to that point. So for the next couple of days, or actually tomorrow, we're really just going to be looking whether or not we can test and break back above the 575 level. If we can't, then we're still chopping sideways, and that's not too encouraging. Let's see, though, if overall there's enough strength in the market to keep pushing us upwards. So VIX came down slightly at 15.36, but the market is up a little bit, so 0.04 coming down 0.04 is not significant at all. So volatility is still elevated. That's not giving us extremely good vibes for a strong movement upwards, but it could happen. We could still hit 580 on this type of volatility level. Let's take a look at our bonds, TLT. TLT continued to move down. It did recover. So the rate cut, 50 basis point rate cut, the bonds just aren't having it. And even so, if we look at the CME watch tool, what's really interesting is that we're now pricing in over a 50% chance of another 50 basis points rate cut. If that happens, what is the Fed signaling? So we got a huge rate cut by the US Fed. Then we had a huge rate cut by the Bank of China. That's not spelling a lot of confidence for the economies, the two largest economies in the world. So if we keep cutting at this rate, it's going to get really uncomfortable. And I still need to finish up my analysis of what's going on in the financials in the banking sector to see if there's something that we need to worry about, something that we need to prepare for in the coming months. For now, it's probably not going to come into focus unless some really big emergency happens before the elections. Elections are going to keep this market mostly uncertain until we actually get the election, because it doesn't look like we're going to get any major interviews or debates before that happens. So let's take a look at the QQQ. QQQ popped up but traded right back down. We did end higher, and we are kind of right in this gap. We just want to close inside this 492 or higher level. That will give us the confidence that we would need to think that QQQ is in line and that the SPY can move higher. If we look at the semiconductors, same thing, gapped up. It is above the EMA 100 and the quarterly VWAP now. So it's just a matter of, do we fill this gap over here at this 265 to 270 level? 265 to 270 level. And then the Dow Jones is still looking good, very flat, but that's nothing different than what we saw in the S&P 500. The only major difference is we didn't get that gap up in the Dow Jones. Well, I guess we did gap up technically from yesterday's close, but not to a new high like we did in the S&P 500. So as long as we still have the defensive sectors in focus, it doesn't matter if the QQQ, doesn't matter if the risky sectors come into focus or not. If they come into focus, if the defensive and the risk assets come into light at the same time, that could be a signal of strength, but it's also a signal of confusion. So what we want to see is that they both improve with a significant difference in the tiering of those risky sectors. So the SMH, the QQQ, not the QQQ, the technology, the retail sectors, all of those leading, and then all of our medium risk like the financials, with the industrials, and so on, and then the consumer staples, the low risk ones. If we get a nice tiered system, then that would open the pathway for us to move significantly higher. As it is, the S&P 500, again, it still just looks kind of like we might kind of top out at this 575, 580 level. Of course, the picture could change by the time we get there. So for now, it's just as far as we can see, the immediate foreseeability, like what's on the horizon, is maybe 580 at the most. And when we get there, we'll see further. So what do we want to focus on? Well, there's kind of this big range that we traded in today. That is an indication of uncertainty. You can see that we closed pretty much right in the middle of the high and the low. So this market is a little undecided. It doesn't really know which direction to move. And we've seen that uncertainty a lot in the past couple of weeks out of the US markets. The directionality has really come from the European and the Asian markets. So that unfortunately didn't change today. We got the gap up because of the Asian European markets, and then we traded back down into basically the same range that we were in before during the US market. So US fund managers still aren't too certain where to take this. For now, we're just going to mostly expect that we're going to chop sideways, maybe float up a little bit, and then we'll see. So if I was going to go into any sectors, which one would there be? So let's take a look at a sector scan over here. And on an average basis, we can still see that silver and gold, these metals, are still getting a lot of attention. Utilities is still up here, which is mixed in with home builders, so some interest rate sensitivity over here. Then we've got the semiconductors, defense, a little bit of a mixed bag over here. So let's take a careful look at silver and gold. If you're in the Telegram channel, you may have seen me send a late night message if you're in gold. This is starting to move up quite high, and there is an inverse correlation with the US dollar because gold is dollar denominated. It moves in direct syncope with the US dollar. So if we start seeing the US dollar gain some strength, then that is going to make it more difficult for gold to continue to move upwards. It's not going to make it impossible. It's just going to make it more difficult. So that's a signal that gold may slow down or even top out and consolidate or even reverse. So I'd be watching this very carefully if I was long gold or silver. So far, it looks good. We could look at gamma to see just how good, but that's going to take me a couple minutes to run, and maybe I'll do it tomorrow instead, because right now I don't want to pause or have you sit here and wait for me for 2 minutes while I run the thing. So right now, let's take a look at our sectors and just see what looks like. Gold does look good, but utilities is looking excellent. Very, very strong, steady trend right there. Home builders is looking okay. And then defense is looking great. So we have some interest rate plays, the continuing conflict plays. Communications is actually looking really good. If I was going to go into tech, it would be in the communication sector. I would still not be ready to go into the chips quite yet, but communications is looking Wonderful. Financials, not bad, not excellent. We did have a double top right here, but we are ascending and moving up along these moving averages. So the expectation, the higher probability event would be to cross up and out or above. And we need financials to start gaining and start leading if we are going to have a sustainable move upwards in the S&P 500 and the QQQ. So financials is definitely one that I'll be looking at very carefully, but also with all these rate cuts and this probability over 50% of another 50 basis point rate cut, the banks are going to be included in that XLF. So what we're talking about right now is only in the short term until I get a deeper look into what's going on over there. I wouldn't be comfortable going long XLF for an extended period of time, or even for 1 or 2 months or more. Discretionary has been doing great. This is looking really good. It's pretty steep. So this would be another thing that I would want to see gamma on, just for so in the short term we know whether or not that this is sustainable, or you could just wait for a pullback. This has been an interesting pattern right here. If we look at XLY, we've gone up, chopped sideways, up, sideways, up, sideways, sort of up, and then so if we go sideways for a significant period of time, then we might see that this trend is over. But if we just go chop sideways and go up again, I mean, things are looking pretty good for XLY at the moment. But of course, if there is something that is going to fall apart, XLY is one of the first sectors that you'll start to see pulling back. So we might want to be a little bit careful, be judicious about the stocks that we go into in XLY. But one of the areas that was supposed to benefit very much from a 50 basis point rate cut was XLY, was mostly the luxury goods, things that people might buy on credit card, things that people, while they're feeling the effects of inflation or high interest rates, they may have chosen not to indulge in, but now that if they perceive interest rates to be cheap, then they might go ahead and greenlight. So that includes a lot of luxury brands. And one that looked really good was TPR, Tapestry. They're owners of Coach. And yes, they did move significantly higher. This was one of the stocks that I identified. So this is a pretty good movement on that today. Luxury goods, XLY, consumer discretionary, definitely a good place to be looking. But of course, once we get that pullback, we want to be very careful. So that SPY, if we do bump up against that 575 again, or if we make it to the 580, that's a good time to take profits on the XLY or any individual names within that sector, within the consumer discretionary sector. And let's just finish up these sectors, see what else looks good. XLI is looking pretty good. Real estate pulling back a little. Once we find liquidity and pause, that could be a good place to re-enter, especially if we're going to get another 50 basis point rate cut, unless of course that sets off a panic, which I wouldn't be surprised, because that's 2 in a row, and that would signal to me that the Fed is panicking. And if the Fed is panicking, then the markets will follow. And that's looking about it. Materials doing pretty well. A lot of sectors doing very well, actually. Healthcare took a step back. And we've got energies looking like they're breaking downwards. So I would be very careful in the energy sector. So energies going down is almost recessionary. Not that we're ready to call or say that there's recession yet, but it could be a sign. Depending on if this continues to break lower, then we just have another reason to be suspicious. We already have a reason to start sniffing around in banks, see if there's anything rotting. And now if energy breaks down at the same time, then we really need to dig in and really prioritize taking a look at that. So for now, though, it's looking like the market is short-term, pretty strong, although I don't like that we didn't get a continuation. So if when I say strong, just take it with a grain of salt. And the understanding that when we say strong is that it can move back up to 575 or maybe 580. And then whether or not it has the potential to go even higher, we'll have to reevaluate at the time when they actually reach those levels. But for now, it's looking like there's a lot of forces against it. So we may be forming a top over here. Well, only time will tell. So we'll see. Okay. So tomorrow we're going to watch that 575 level very carefully. We're going to watch our consumer discretionary, watch for that pullback. You're going to watch for that US dollar, see if that starts to strengthen. Any of those signs or all of them altogether could be could cause us to shift to a more neutral, or actually, because right now we're just a baby amount bullish, but we would definitely shift back to neutral or maybe even slightly bearish, because we would start to anticipate a mean reversion. A mean reversion means back down to here. It's not super big. It's nothing to panic over. Maybe back down to that MA50. And then if it's on the larger side, down to the MA200. At this time, I don't really expect the MA200 to break before elections. It'd be very strange and unusual. It would have to be something that fund managers are really panicking about and not just pessimistic about. Because for the most part, managers don't want to allocate significant amounts of money before an election happens. So that is going to complete today's post-market analysis. Have a wonderful rest of your day, and I will see you guys. Oh, tomorrow's Friday, so I don't do post-market analyses on Fridays, and I'm going to be on a plane anyway, so I wouldn't be able to do it. So I will have a weekend video for you guys, a market review video. I'll post it sometime over the weekend.